So I've just started the live stream here on Discord with our VIP members, unicorns everywhere. Let's see how many people decide to join us on this little backtesting session here on a Sunday. I mean, it's fair enough if you have better things to do on a Sunday. We already spend enough time, simply trading. I'm gonna start here during October just because out of curiosity, if we can improve our entries using the unicorn setup. And therefore we simply gonna get started. In the background I have my weekly outlook, which this time is 46 minutes long, so it's a pretty long weekly outlook where I mainly talk about how I frame my daily, weekly and monthly bias about by listening to the story that the fair value gaps tell me. Basically the the core principle that I use to do that. And yeah, we will see how that goes. And yeah, let's jump into TradingView right now and start here on Monday, the 2nd of October. I'm not gonna go through the replay mode. This would just take too long. I just want to see if I see any nice unicorn setups. We took out the Asia sell side. Didn't really no market structure shift here with a pullback, so this would have simply been a losing day. Here, in order for the 2022 setup inside the London kill zone, we took the Asia session high and also the high of the day, which came in right here at the 6 p.m. opening of the new daily candle. So we took that buy side right here. And for the 5-minute market structure shift, would be hard to tell because this entire move to the upside started at exactly 2 a.m. And that's when we got that strong push to the upside right here, without really putting structure in place. So yeah, I don't know, it would be tough to, we could look for a short-term low. Let's see if this candle formed a lower low or equal lows. No, really just formed equal lows. We also didn't close below it. We hit a bearish fair value gap right here and we continued lower from that. But I'd simply deem this day as a no trade day, no unicorn setup, no 2022 model, simply Asia low, Asia high, continuation to the downside. Alright, let's take a look at the New York session here, starting at 9:30. We got our bullish market structure shift right here with the 9:30 opening, paired with our bullish fair value gap. Let's see, bullish fair value gap right here. We could have also chosen the lowest one, but yeah, for our low-hanging fruit entries, we choose the highest one. We target our, maybe here right on the breaker block is where I would have placed my entry, because we had a big bullish fair value gap on the market structure shift candle, so it's simply placing it at the high really wouldn't have done it for me. I would at least like to see the breaker block being the highest up closing candle right here to be retested. This is our breaker block. Entry right here on the breaker block, 50% off the bullish fair value gap. That seems fine to me. Stop loss is just right here at this low. We target our 221, which in this scenario wouldn't have been hit. But we hit some buy side liquidity targets, so at least for the funded accounts, we would have taken some partials here. I mean, it ran 17 points. That's good enough. We consolidated for a long time right after the New York Open. 9:30, 10:30, then we had to push up the displacement to the downside. Well, kind of a unicorn setup here towards the end, but because we shifted structure again to the downside on this bearish candle, but that's already at the end of our kill zone, and entries after that doesn't really make sense. Because like we said in our explanation video about the unicorn setup, which we are testing right here, or just taking a general look at, this is the breaker block, the bullish breaker block. We want to see displacement to the upside followed by a quick new displacement to the downside, not consolidation for, I don't know, 2 or 3 hours before we get the new displacement to the downside. So we get the pump up. Unfortunately, it didn't hit our 2-to-1 target, but we hit a 1.5, displaced to the downside, bearish fair value gap. This candle would have become our new unicorn breaker, the lowest down closing candle between this low and this high. Breaker block entry. I mean, for a scalp entry, into the PM session, it would have been just fine. But really, yeah, during PM we also didn't continue lower. But for a scalp, we leave behind a fair value gap right here. So we enter on the fair value gap paired with the breaker block. Potential 15 points here to the downside of this unicorn entry. But like I said, I don't like that we have so much time in between our first market structure shift and our new one. That's more than 2 hours. We will see what the backtesting results will show us. This is just a rough, let me check the Discord or VIP chat. A little bit spontaneous here, but today I'm forced to. So let's take a look at Tuesday right here. We took the Asia session low. We got our market structure shift, but really not with an entry. We continued higher, took the high, formed a higher high. No, not really a 2022 model for me. Also no unicorn setup. I mean, yeah, we had our break-in structure. Once we closed back below the slow, paired with a fair value gap, we could have played that. But this could have also just been a retracement for another continuation higher. We still had buy-side liquidity that could have been targeted, so no entry really for me during the London session. And we're not here to backtest the 2022 setup, we're looking specifically for the unicorn setup. So right here, I'd say we have one right in front of our eyes. That's exactly what we're looking for. So we see how we've been forming lower lows and lower highs, lower high, lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. So here we had our market structure shift for the 2022 setup, continued higher and higher and higher, made a new higher high, taking out all these most recent lower highs, retesting basically almost the London session low, or at least the old low of the day right here. Retested that, and right here with 10 a.m. likely, we also had some news on the calendar. We could have anticipated the unicorn short. Right here we had the bullish market structure shift, and right here we had our bearish unicorn setup. Bullish market structure shift didn't hold up. We got the displacement to the downside without so much time in between. Bullish market structure shift, bearish market structure shift, just 30 minutes apart from each other. We had our breaker block being the slowest down closing candle right here. And we also had a bearish fair value gap paired with that. We enter right on that low of the bearish fair value gap, paired with the breaker block, overlapping confluence like we spoke about in the VIP video about the unicorn setup. Short position, we enter short right here, stop loss goes above the high. Target a 1-to-1 or a 2-to-1. Let's see, 1-to-1 would have been hit easily. 2-to-1 would it have been hit by the end of the trading day? I don't think it would have, but it's also a pretty big stop loss, so that's more than a 44-point move on ES. If you look at the average daily ranges, I don't know, if you already have a 22-point stop loss and we get the unicorn setup, relatively speaking, at the low of the day, we just took Monday's low out right here after the 9:30 open, so we had reason to believe that it's continuing back above London sessions high. The news candle came in and gave us the unicorn setup, so already having a daily range of basically 45 points, expecting another 50 points on top of that. It's pretty rare that we see these strong movements, but sometimes I guess they do happen. And if you trade CFDs, eventually the take profit target of 2-to-1 would have been hit. But in reality, I think we should have been just fine with this news candle placing our stop loss, making it smaller, targeting a lower risk to reward. 2-to-1 would have been hit here during the PM session, eventually for 39 points in profit. I would have simply made a scalp out of this and entered right here looking for just, let's say, 20 points. Yeah, I know, just 20 points with a mini contract. Let's say 1-to-1 risk to reward. 20 points on a mini, it's like $1,000 on a funded account. That's not bad at all. So unicorn setup right here, I hope it makes sense. We had initially our bullish market structure shift after taking out the low. We've completely invalidated this, and instead of just sitting here wondering why the 2022 model didn't play out, we get the opportunity to enter short at the low of the day with a profitable setup. We have a good delta between our initial 2022 market structure shift and our new unicorn market structure shift down here. So I think that that counts. Let's see if we have any questions with that. No, not yet. Like I said, I will upload the recording later on for everyone to watch. Here we took out the Asia session low, lower high, lower low. We had a bullish 2022 setup, which played out perfectly. Our stop loss would have been just like this. We had our market structure shift paired with a bullish share value gap. This would have been our entry right here. Stop loss would have been right here at the low. Target our 221. Maybe leave a runner to some higher highs, or maybe the Asia session high. Getting our entry below the previous day's low, below the Asia session low. Targeting the potential low of the session. Continuation up higher for a almost 5 risk reward to the Asia session high. That's pretty nice to see. And then during the New York session, we had the opportunity for a unicorn setup. Let me see. I think we actually had 2 unicorn setups here. I just got a message on Discord, so let me check that out. Hey Ryan. Perfect. What do you think about the unicorn video? It's pretty cool, and that's why I decided to run a little test while the weekly outlook is still being processed. We are in October. We started at the 1st of October, covered so far this 2022 setup and the unicorn setup right here. From the low of the day after taking out Monday's low of the 2nd of October, we got our bullish 2022 market structure shift right here. But at 10 AM we got a news candle, so I wouldn't have entered on that really. Close below with a bearish market structure shift. New bearish breaker block, new bearish share value gap, easily 20 points, 30 points, even 40 points within that AM session have been hit. Okay, 38 points, I'm not gonna lie here. But this way we can still enter short at basically the low of the day, and with a proper model. I think the last one we had was here on Monday, but Monday didn't really offer nice price action. We saw the same thing, bullish market structure shift, and afterwards the unicorn setup, but it's already 11:50. And I don't know, I didn't like the time between our bullish market structure shift and the unicorn market structure shift being more than 2 hours, like I spoke about in the VIP lesson about the unicorn setup. We want to see the market structure shift happen, or the 2 opposing market structure shifts happen at least 1.5 max, 1.5 hours between each other, like on a 5-minute time frame. If we do too much stuff in between, I wouldn't really count it, but this would be a prime example. Then we moved over to the 2022 setup on Wednesday, played out very nice. And now we're here on the New York session, and let's see if we get another unicorn setup here. Just a little recap for you. Yeah, I'm definitely going to use it as a fail-safe method for the trade day account. And maybe even as a standalone strategy. So right here, we took out the high of the day with the 9:30 opening. We didn't close above, so no chance we're going to go long at the high of the day without a unicorn setup. Low right here, bearish fair value gap. This would have been our 2022 setup entry with the market structure shift, stop loss being above the high, targeting a 221. I think fair enough to assume that we continue lower from here, and we got stopped out unfortunately, which would have led to a unicorn setup within our session. we retraced a little bit deeper and continued to go higher from here, but now in this scenario, no proper unicorn setup. We would have waited for a close above this high for a new market structure shift paired with a breaker block and bullish fair value gap. Really, we could look at our consecutive up closing candles as our breaker block, which ended up holding support, but we don't look for an entry later on throughout the day. We really want to see, let's see, that bearish market structure shift to our bullish market structure shift is almost 2 hours, 1 hour and 45 minutes away from each other. Not really what we'd like to see. But I mean, at this point in time, it looked relatively bullish. We had our breaker block. Enough reason to believe that we're at least going to hit a 1-to-1 of our breaker, ideally with a bullish fair value gap. But we've been lacking on the bullish fair value gap part. Right here, this would have been the last bullish fair value gap. Target the low. We would have been filled at the beginning of the PM session, targeting a 1-to-1. Would have worked out just fine. So like said, the fail-safe method for me would mean, if I trade the 2022 model as my main model, I enter short. I entered long already during London and I made 2% profit, depending on if I keep on trailing this to the Asia session high. Then for the New York session, from the high of the new daily candle, got a bearish market structure shift right here at 10 a.m. We enter short, but we've lost 1% here. So we're now only up, theoretically, going for a fixed 2-to-1. Only 1%. And if we get the unicorn setup, I would risk a third trade basically here. And only target a 1-to-1 to make sure that if New York session or London session has been a loss, one of them basically, to get back to the break-even point. Because targeting a 2-to-1 towards the PM session, and especially with the stop loss placement that I set, right here at the low, that's once again a 25-point stop, meaning that we basically have to move 50 points during the PM session. That's not very likely. That's why it doesn't make sense to use a higher risk to reward if you use the stop loss placement that I do at this low of the day, where we retrace below the 50% of the daily range. Let me measure that out. Yeah, below the 50%, we took sell side below the 50% from the London session low to the 930 high. We reprice lower into a discount, take sell side liquidity, get a displacement to the upside. So really, yeah, if we would have taken that unicorn setup, I think after 25 points here to the upside, we really should have been content with enough. Also looking at the timing, it's 15:35. We had a deeper retracement than we normally have. But also, yeah, it's less of a fortunate, or I don't know, I'm missing the speed in the setup right here. I mean, yeah, we continued rather quickly to the upside, but then we started to slowly retrace until almost the middle of the PM session before we get that last expansion to the upside. Going for a 1-to-1 really would have been fine here, but it just goes to show that it still works. Bullish fair value gap paired with the breaker block. Pretty nice. So overall, this would have been a 2% trading day. This is really the kind of volatility I would be looking for with the unicorn setup happening within the same session. Bullish market structure shift, bearish market structure shift, like we saw this Friday. But yeah, here we can already see, comparing this setup to the setup right here. Yeah, we swept sell side below the 50% and we got a displacement afterwards. The unicorn setup going back above this high. I mean, already after filling us on this bearish fair value gap right here, created right here, we would have been wicked in on this candle right here. We continued below the 50%. In reality, we got a new bullish market structure shift here. We pulled back, holding support on the order block, bounced once again off the 50%. And from here on, we already delivered further to the upside. No. I don't like that. But we just used this little backtesting session to gain some more insights on the potential unicorn setups. Let's go here to this London session on Thursday, so we also make some progress. We then take out the Asia high, we took out the Asia low, we shifted structure, we failed. Towards the end of the London kill zone, I wouldn't take a continuation short at the end. I would wait for the New York session to open up. But this is essentially, once again, what we would be looking for. Market structure shift to the upside, new displacement to the downside. But outside of our kill zone, we want to see that happening within our timing window. Because we don't want to simply spend all day in front of the charts. This is why I would also simply, if we get this set up during New York, towards the end of the kill zone, I mean here it's 11:50, would already be too late, but if you want to, if the backtesting provides us the opportunity, we can simply set and forget, set a 1-to-1, or simply target 10 points or target the old high. Put your stop loss, try to make it a little bit smaller, but depending on where you would have placed it, maybe the 50%, the New York midnight level, be a tough one. I have to gather more data based on that. So for the 9:30 setup, we didn't form a lower low high. We took out the Asia session high at 8, got our market structure shift. So this, if anything, would have been a bearish 2022 setup. We form higher highs and higher lows. Displacement to the downside. Let me get rid of this old fib. Pull back into a fair value gap right here at the high and continue lower from here. So no potential. This could be framed as a unicorn setup. New market structure shift down here, but really missing the fair value gap here. We only had a inversion fair value gap down there. We closed above the high, so we could have used it as a breaker block. Interesting. Let's see. If you have any questions, Ryan, feel free to ask me while I'm going through the month of October. Here we took out the Asia session low, bounced off the fair value gap after shifting structure. Yeah, not here yet because we didn't close above the high. We only touched the high, pulled back and delivered higher from here. Higher high, higher high, higher low. Yeah, no potential setup right here. And then we likely had NFP news on the first Friday of October. Bullish market structure shift, pull back into the fair value gap and rally back up. So, okay, this was the first week. Interesting. Let's already get started with the second week. So here we took at the beginning of the London kill zone the Asia session high. We've eventually got our display. Once again, would be hard to draw our displacement right here. 2:55, 3 a.m. London open. Bearish fair value gap, continuation into the Asia low. And from here, well, no unicorn setup. Let's take a look at the New York session. So we move into the high of the day with the New York open. We form a higher low, a lower high, and once again a lower low. Bearish fair value gap. Go back above the high. Sweep sell side below the 50%. Nah, not really on this one. Close above. Highest up closing candle would become our breaker block. Kept holding that perfectly. We had a fair value gap paired with that. Right here and right down here. So I simply would have placed my limit order on the breaker block right here. Stop loss below the low after 9:30. Targeting a 1-to-1. And here we got the rally during the PM session. But our 1-to-1 would have been hit. Because we really didn't get a proper 2022 setup right here. I mean, yeah, kind of, but if we would have taken this high here to the upside, we could have taken a short from this lowest bearish fair value gap. But on the 5-minute, that's really not possible. I think maybe I just saw that. Market structure shift with 10 a.m. Bearish fair value gap. We delivered lower from here. Let's see if that 2 to 1 would have played out. So we can really see how often the 2022 model fails here on the 5-minute time frame, but also how often the unicorn setup ends up saving the potential loss that we've seen. Let me head over to Discord. You mean Topstep account? I know it's tempting. $11. I mean, it's up to you. It's still a $150 activation fee, and I don't really like the Topstep rules. But yeah, I got one for the scalper strategy to add another 50k account to the already existing funded one. But I think for the New York session and the London live streams, I already have plenty of accounts. Let's continue with Tuesday here. We took out the low, the Asia session low, break in structure. We took out the high. Yeah, nothing in this kill zone. We took out the low right here at 8 a.m. Did we? Now we left behind equal lows. Push to the upside. Massive expansion. No market structure shift here until later during the PM session. Something on the 1 minute. I think I remember that day. Asia consolidation. We take out the low. We shift structure with a fair value gap. And we have our 2022 model, but no unicorn set up here on Wednesday. Here we 930 takes out the high. We get our displacement to the downside paired with a nice bearish fair value gap. That's exactly the difference that I spoke about on the last setup that we saw. Right here, we took out our high of the day after the 930 opening, followed by a displacement close below the slower high. We enter right here on the bearish fair value gap. Stop loss goes above the high. We target our 2 to 1, and that would have hit. Just worked just beautifully, and we didn't go back above our high, so no potential unicorn setup until maybe later during the PM session, but that already happened at 4 p.m. so no way we would have taken that. Let's check out the London session. Higher high, higher low, displacement. No fair value gap entry up here. We also didn't hit the Asia sell side. We continued back to the upside and got a potential unicorn setup after the kill zone, but we don't care about that. Then we had 8:10, 8:30 news here on Thursday from the high of the day with a displacement to the downside, bearish inefficiency. Didn't really reach the breaker block. We could have hit a 2 to 1 risk to reward ratio from here. This likely would have been now 1 p.m. we started selling off. Yeah, 2022 model, no chance for a, even with the New York open, no new bullish market structure shift. No. No, that's just one candle. We don't really count that as a potential setup. If anything, this would have been a potential free drives. High, high, high. Higher low. Broke that, but also without the entry opportunity because we just sold off here. So let's already get started with Friday here. We took out the low, shifted structure, hit the bullish fair value gap, took out the Asia buy side, 2 to 1 likely hit. And then we got the unicorn setup going back below our low right here, and we continued lower from here, but that's outside the kill zone. Then looking at the New York session, we're back at our high of the day. So we really see how we move from the high to the low, back to the high. We got our displacement right here with the close below. But really, we only hit the breaker block here, the slowest down closing candle, before we made that last higher high or the consecutive 2. These 2 candles would be framed as our breaker block without the fair value gap entry, without the unicorn setup. So this would have just been a breaker block entry or nothing. I would have likely waited for the bearish fair value gap to be hit up here, since all we did over here was leave behind big wicks. This wouldn't have worked. And that's already the end of the week. Friday the 13th of October. No questions as such. I think looking for this is a natural progression from a 2022 model failure. Exactly. I'm just curious on how often these occur, because we saw 3 of them last week, 1 during London and 2 during the New York kill zone. I think, well, I don't know, if we have a really bullish week, like we had, not really bullish, but let's at least say for Friday. Friday formed the previous week low and previous week high, heading into next week, 1 single day, and we tried to short from the high of the day, but we've immediately been invalidated and we continued further to the upside, like we, for example, did right here. Or we had our bearish 2022 setup. Well, still requires some imagination, and that's really not what it should be like. I mean, yeah, lower low, higher high, down closing candle in between. We displaced right at 10 a.m. Failed to take out the sell side liquidity. Measuring from the low to the high, did we hit a 50% level? Yeah, we hit 50%. Back into a discount for higher prices, but breaker block fair value gap entry would have worked. Where did we stop? Monday, I think. Okay, so here Monday, London session, we took out the Asia session high, immediately reversed without any proper sign for a market structure shift. Neither did we leave behind any fair value gaps, so just nothing for us. We took out the Asia session low and the 1:45 a.m. low. And then we got our market structure shift confirmed right here. Breaker block, bullish fair value gap, entry outside the kill zone for the continuation higher. Coming in at the high of the day, we didn't shift structure. We didn't go below the 50% of the daily range up until 9:30. So no unicorn setup continuation for us right here. We simply just consolidated until we expanded further up. Nothing here for us. And then at the high of the day, displacement, bearish fair value gap into the PM session. Wouldn't have taken that. Took the Asia session low, displacement to the upside, but we failed right here to continue to the Asia buy side. So this would have been a loss on the 2022 setup. But we displaced back to the downside, still within our kill zone and with momentum this time. Higher high, higher low, displacement below our low, bearish fair value gap, breaker block, entry, would have hit our take profit target. So right here, this would have been the entry, stop loss always above the session high, target A121, based on the failed 2022 model right here, where we took out the low, displaced above, kept holding support on the bullish fair value gap, but failed to continue higher to compensate for that loss. Looking for the short. Entry still happened within our timing window of the London kill zone. 1-to-1 would have been hit, and even a 2-to-1. 22 points. Then here on Tuesday, New York session, we formed lower lows and lower highs. We had no market structure shift confirmed with a close right here, so no 2022 model here. We got the market structure shift confirmed though on this candle without ever retracing into it. So breaker block fair value gap entry wouldn't have worked here, only if we used that highest fair value gap from which we continued higher. So nothing here on Tuesday. London session, we took out the high. We shifted structure. Took out the high. We had bearish fair value gaps that have been respected perfectly after taking out the Asia high right here. Market structure shift right here. Bearish fair value gap entry with the breaker block would have played out. 2022 setup. This looks interesting, but also choppy. We will see. Right here, we come from the low of the day. 9:30 opens up, doesn't shift structure because we don't really close above this high. continued lower, pulled back, continued lower one more time, and then we shifted structure right here to the upside, leaving behind a breaker block, bullish fair value gap entry. This one would have failed, but we immediately got our invalidation for the 2022 setup coming in at the low of the daily candle, and we continued lower. That's when we tried to compensate for the loss that occurred with the 2022 setup, placing our entry right here on the lowest down closing candle, paired with a bearish fair value gap. Right here would have been filled either on this candle or over here. 1-to-1 risk to reward ratio. Stop loss above this high. Could have been tricky, 18 points. But 1-to-1, like always, would have been hit even before the PM session. And a 2-to-1, I think, would have been hit as well. And that's really when we can rely on the unicorn setup, is when we aggressively see the 2022 setup before that from the low of the day fail. Because at this point in time, we can say with high conviction that all we did was retrace above the 50%, sweep buy side liquidity in this case into a discount, relatively speaking, to continue lower into a premium, to continue lower into a discount. Yeah, really nice to see it work out so many times after the 2022 setup failed. That's pretty cool. Let me drink some water. Let me check the progress of the... only 40%. That's taking forever. Anyway, let's continue. We've been streaming for 36 minutes. What's the time? 2:57. So right here, Asia, we took out the low. No real market structure shift, just some sort of a whipsaw. Let's continue with the New York session. Right here, we had equal highs. New York opened up, didn't take these highs. Market structure shift, 2022 model to the downside. What happened here? Lots of whips on it. It's really making it hard. We went to the upside at 12. No trade day. Failed to make a lower high. Mitigation block, bullish fair value gap entry towards the Asia session high. No unicorn setup whatsoever here. 9:30 opens up. Fails to take out the London session high. Displacement to the downside. And during the PM session, we would have kind of seen a unicorn setup here. But I would have preferred the London session high to be taken. No, not ideal. Even though it would have played out. Breaker block for the unicorn setup. Continuation lower. Monday, the 23rd of October. We failed to take out the Asia session high. Displacement though, continuation lower, no unicorn setup. 9:30 open, sweep sell side, I remember that day. Continuation to the upside without a short opportunity. After this one right here, nope. Asia, London high, London took the Asia high. Market structure shift, bearish fair value gap failed. Displacement back above. Kept on holding up, so once again we look for the highest point for London. Kept holding support to easily deliver into a 2-to-1 from the high of the day after the 9:30 open. Didn't get a market structure shift until right here. Bearish fair value gap entry, continuation lower, so the 2022 model would have played out here from the high of the day. We are already at the low of the day. We get our displacement to the upside, but without the fair value gap, so no 2022 setup entry. We simply retraced into these inefficiencies right here. No unicorn setup there. High. Low, simply continued selling off, but we see that narrative that if we get a strong sell-off, at the 9:30 open is London session low, oftentimes delivers the continuation setup into the later New York session. So, well, maybe, let's say this would be a 15-minute unicorn setup based on the daily candle open up right here. We took out London buy side, rejected off the midnight level at 8:15, which would have been a bullish market structure shift for a 15-minute bullish 2022 setup. Breaker block right here. We fail with the 9:30 open. We look for our lowest point for the unicorn setup, retrace into that, and continue lower from there. So this would be an example for a 15-minute unicorn setup. Just, collecting some thoughts on them. I mean, we see how often it occurred just during October, how often the 2022 setup failed, and then we've basically been saved, or at least recovered our loss with the unicorn setup. Let's see if we have any questions. I think I'm gonna learn much more from live trading it, like always. We've almost finished the entire month of October. Let me go back on the 5-minute time frame. Yes. We've been here. We've looked at this one already. We've looked at Tuesday. This is where we ended up. So now we're here on Thursday. Lower low, swept the Asia low, market structure shift, breaker block, bullish fair value gap entry, not during the kill zone. We retraced, but we've kept respecting this low, so no entry for us during London. Coming from the high of the day, we took out with 9:30, we took out the high, we shifted structure. Bearish fair value gap right here for the 2022 setup. Oh, close one. That wouldn't have been hit, depending on our entry right here. Right here would have been a fair value gap. 2-to-1 stop loss just at this high. Let me be more precise here. Entry on the volume imbalance. First fair value gap after the structure shift. Got a last pump to the upside again, but no unicorn setup because we didn't close back above the high of the day. I think, with precision, this would have worked out 2-to-1. Right here, the entry, let me zoom in. On the volume imbalance with the bearish fair value gap from this candle's low to this candle's high. That's why we always place the stop loss at the high for what we do with the trade day account for the 66-day challenge. No unicorn setup here. Took out the high, structure shift, bearish fair value gap. Likely would have missed a 2-to-1. No, would have worked out. 2-to-1 risk reward hit 2022 model win during London. We took out the high, displacement, 3 AM. That's Friday. That's not too long ago. New displacement to the upside, bullish market structure shift to target the old London highs. And then New York session, 8 AM from the low of the day. Displacement back to the downside. No 2022 model, no unicorn setup. Let me see. I think not at the 9:30 opening, but we formed a lower low. And we closed above this high, making this a breaker block, failing into the PM session, so 2022 setup failed. We closed below right here. And wouldn't have gotten the fair value gap breaker block entry, so this would have simply been a losing day using the 2022 with the fail-safe method unicorn setup. Continue above the high, consolidate, push higher. No bearish fair value gap entry here. But we go back, retrade, didn't really take sell side. And the London unicorn model, I mean, we see that same narrative. London high of the day, we retrace, we displace back to the upside after displacing to the downside. So we could look at our most recent up-closing candles between this low and this high as our breaker block, which eventually kept on holding into the New York Open. So this would be a London session unicorn setup. High, low, market structure shift. Nope. Nothing really here. Close back above the high, but already put in the entire daily range. And now we're on the 30th of October. No entry during the London 2022 model up down here. Heading into the New York session from the high of the day. Market structure shift. Pre-New York Open 2022 model. Hit 2 to 1. New displacement to the upside right here. So this would have been long we'd likely targeted. And why did this work? Because we retraced and took sell side below the 50% of the daily range. Looking at this right here, 50% sell side taken. We kept holding support. We said that we didn't get an entry on this London 2022 setup with the breaker block and the bullish fair value gaps right here. But eventually, with the New York Open, we still kept holding support here. No reason for us to make a new lower low. We kept holding the 2022 model, forming a new one in here. Short-term high broken, bullish fair value gap, breaker block, continuation higher, and eventually even a unicorn setup, but we can see the time in between the setups. Market structure shift bearish, new structure shift above the old high of the day. Between AM and PM session really, but still breaker block entry paired with a bullish fair value gap would have come in right here. Stop loss below, well, all the way below this low would have been tough. That's 25 points. In this scenario, I wouldn't have taken the trade anyway. The 2022 setup worked out, and there's just too much time between the two opposing market structure shifts right here. 4 hours, and even if we use the market structure shift over here, still 3 hours. It would be way too long. Asia session high, 2022 setup, played out, no unicorn setup. But once again, we took out the low. We displaced back above our London session high, and London session high keeps on holding price into the 930 open to continue up higher. So, I mean, you could still consider this a unicorn setup. We had our bearish market structure shift here to the downside. But yeah, just wouldn't count for me because, or at least with the information that I have right now, we shifted structure right here. Bearish fair value gap entry. London would have hit our 2 to 1 risk to reward ratio down here. And then we saw a new push to the upside without the fair value gap entry coming from the low of the day, going back up. But overall we had a, how much time in between the London market structure shift and the new bullish one? Yeah, almost 5 hours. But eventually, yeah, it kept on holding and delivered into a new high of the day. No 2022 model short here at all. Maybe later during the PM session. Retraced, nope. And that's the entire month of October. And we saw how often we still get these, I don't know, coming from the low of the day, not getting the 2022 model entry, but high probability that the low of the day has been formed. We close above the London session high. And from here on, all we did really during the pre-New York Open is consolidate here, take the highs, take the lows. Then we get the expansion move with 830 news to the upside. We hold the old London high and rally from here. And we've seen that a couple of times. Even though we have so much time in between. So this could still be used by us, I think. Let's see, where we see that last time. Right here, London low, this time holding support to continue lower. New York Open just completely displaced below. London low kept holding. London high kept holding here into the New York Open. London low, displacement to the downside. London low kept holding lower. No, but I think overall, during this month, I think we should have been fine. We saw plenty of 2022 setups. When they didn't work, almost every time except for one scenario where it didn't hit a 1-to-1 risk to reward ratio, I think. But every time we get the immediate displacement, right after we get, what's to say, immediate displacement, we at least almost hit a 1-to-1 risk to reward ratio, which really just backs up the claim that if the 2022 setup fails from the high of the day and we displace back above it within the same session, we keep holding support on this old high of the day to deliver at least into a 1-to-1 risk to reward ratio. Another example. Yeah, this is still an example, but playing out over the New York AM and New York PM session. So the best thing that you could have done here is simply set and forget a limit order. Maybe use lower risk. But yeah, if it's that late in the session, always targeting a high risk to reward ratio wouldn't be the best thing to do. Like I explained in the unicorn setup video, target buy side liquidity, target a fib retracement, target a specific extension of the new market structure shift. But yeah, like we said, lots of time between the new market, almost 2 hours. I'm gonna see them happen back to back, ideally, like we saw this week. If we go all the way over here to Friday, higher high, we took out the 925 high. We displaced to the downside once we closed below the slow. So this would have been our displacement right here. Displacement candle. And then we had this nice bullish momentum to the upside, which is only less than 1 hour difference between the two opposing market structure shifts, one right here and a new one up here. And we could, in this scenario, also use the ICT all-in-one indicator to show us the market structure shifts. Let it load here quickly. I think the settings are not correct. It labeled this one as a market structure shift. Yeah, that's fair enough. We also looked at this one, but we didn't get the fair value gap entry, so we didn't enter here. Then we labeled this as our new market structure shift because we found a higher low, higher high, lower low, where the indicator would have just suggested a break in structure. Bullish market structure shift, but we look for the bullish market structure shift above the old high for the unicorn setup. Let's see where we have the London example. Right here would have been the London example. That works much better. Market structure shift to the downside with the London open. Immediate displacement to the upside. So here we barely have any time in between, and we can be 90% sure that the London open move has been a fake out move below the 50% of our daily range to sweep sell side liquidity right here and right there. We leave behind a new breaker block paired with a new bullish fair value gap to deliver the unicorn model to the upside. On New York session, we got the bearish 2022 setup from the high of the day. That worked out well, and a new one over here. Theoretically, we could break this down as a unicorn model as well, but a internal one where we, I hope you see that this is external, high and low, or this is internal. You wouldn't really see this on a higher time frame, but same principle applies. We get a market structure shift to the upside. We close above with a bullish fair value gap, so we could have played internal or fractal 2022 model. If we do that, I don't do that, but because it's not really from the low of the day. Bullish fair value gap fails immediately, followed by a bearish market structure shift, followed by a bearish fair value gap, followed by a bearish breaker block, really. Lowest down closing candle right here. Breaker block, bearish fair value gap, perfectly respected. And we immediately continued lower. So this would be a fractal internal unicorn setup, because we initially displaced to the upside, immediately negated that with a new market structure shift to the downside, holding all the PD arrays, continuing lower, which eventually hit my 2-to-1 risk reward ratio of the entry that we took right here, targeting the lows. Then I think the last setup we've got, now that was the 2022 model on Wednesday, played out perfectly. No unicorn setup here. On Tuesday, on Tuesday we saw the 5-minute unicorn setup during New York. We had our high being formed, 9:30 opens up, we get our displacement, we entered short on the 2022 setup here, but all we did once again was sweep sell side below the 50% of the daily range. I can draw this in again. From here up to here, this is our daily range. If we ignore everything that happened before 9:30, like this, daily candle opened up, London low cleared, London high cleared. What do? We just place below the 50%, take sell side liquidity. That's check number 1, bearish market structure shift. 2022 setup fails. And this is our bearish market structure shift right here to our new bullish market structure shift back above our old high. It's only 30 minutes. This is ideal because then probability is super high. We also caught this one on the live stream. Then especially if this displacement candle happens to be the market open candle, we can be, I'd say, 99% sure that the 9:30 opening has been a Judas swing or a fake move to the downside, trapping traders short, quickly liquidating them, stop hunt with the move to the upside, delivering us a new bullish market structure shift at the high of the day. We have buy side liquidity above previous day, previous week's high. I've spoke about this example in the VIP explanation guide for the unicorn setup. We have our bullish breaker block right here. We've respected this one to the tick. Bullish breaker block. I know it's red right now. I could change that simply to the breaker block. Right there, bullish fair value gap, and we continued higher through this buy side liquidity. Yeah, worked out really nice. Yeah, I'm definitely going to continue with the unicorn setup, especially if it's looking like this, where we get the sudden displacement with the 9:30 opening. We still take the short. The probability is still here that it's playing out, and with our 2-to-1, we do not really need more than a 50% win rate to really be profitable over the long run. And even if it happens to fail and we get our confirmation very quickly if it's failing, so right here, market structure shift at 9:30, new market structure shift at 10, can say that this is a fake out move with very high probability. We enter on the long, on the bullish fair value gap, or just the breaker block, target our 1-to-1 or 2-to-1. That's up to you. In this scenario, let's see, because the move happened so quickly, usually we saw the new unicorn setup form after 11 a.m. So lots of movement, lots of volume has been already put into the market, which I would say lowers the probability of it hitting a higher risk reward ratio. But here, entry at 10 a.m. on a bullish fair value gap from the high of the day, even if you place a stop loss below here, this just happens to be a 10-point stop loss. And for it to really move twice that much to the upside is more likely than if we would have had, let's see, 2-to-1 would have been hit eventually before the end of the PM session. Of course, you would have to trust. We had a new bearish 2022 model here at the high, 20 points. That's $1,000 if you use one mini. 20 points would have been hit nicely off the fair value gap entry with our 10-point stop loss. Always depends what you're targeting. If you just target buy side or a simple 1-to-1 or 1.5 to compensate for your initial 2022 model loss, then I'd say a 1-to-1, maybe a 1.5 should be fine, or you simply go for a specific point target, or you, yes, only trade the second market structure shift basically, which is the unicorn model for the New York or London session after the first one failed. So you could use a separate Apex or Topstep account for this specific approach, where you wait for the first market structure shift to happen, a nice immediate displacement back up, because then you have the high probability of knowing the 930 opening move has been a fake out move, to get rid of some of the long positions that have been already put in the market, quickly stop hunt them, trap new short traders into a position, quickly stop hunt them, liquidate them as well. You wait for orders to happen before ever engaging, and then you take the continuation move to the upside. That's really up to you. I mean, you can scalp with this, you can use it with a fixed risk reward, you can target buy side, whatever you end up doing. But yeah, I don't know. I like to still play the 2022 setup because of the probability it has with it. And if it fails, I would use it as a backup method to have in my toolbox of trading setups to, yeah, potentially get back to break even for that specific session if the first trade has been a losing trade. Maybe for a different account. I mean, it's not the case that as a funded trader you only have one funded account. Eventually, with time, you have multiple funded accounts where you can trade with multiple strategies. So, because I like the 2022 model and it has done so much for me, I will keep using it. And maybe for a different account, I will not trade the 2022 model on this anymore, and I wait for only the unicorn setup to form. But I still want to make sure I'm trading the 2022 setup because it's my favorite one, and the unicorn setup is basically the 2022 setup just flipped on its head back to back. So if you trade only the 2022 setup, I think it makes sense to add the unicorn setup to your toolbox as a fail-safe method to at least compensate for a potential loss on the 2022 model. And like I said, not losing on a specific session or trading day is already winning because you're not giving anything of your equity away again. It's not always about making profit on a specific trading day. Even not losing, even though your setup failed, is already a win. And yeah, I would really count it as a win if the fail-safe backup method, that in case the 2022 model fails and we get the immediate confirmation for likely the initial 2022 model being a fake out move, to use the backup method to compensate for that loss and at least get out at break even and be content for the day, not losing, starting fresh tomorrow or maybe the next week. And yeah, if you do not like the 2022 setup, because we saw it failed a couple times this week, but every strategy or every setup model pattern is eventually gonna fail. I think it would be fair to also only go for the unicorn setup after the first 2022 model has failed. I'd say it would have a higher win rate because been talking about it a lot right now. We can say with high probability that this initial displacement to the downside, especially if it sweeps sell side below the 50% of the daily range, we can look at it again right here. Repriced into a discount. We had a bullish uptrend before. And before delivering this pump, what did market makers decide to do at the New York Open? Oh yeah, too many people are already long. We want to get in with a bigger position, so we need people, buyers, to sell into our hands. They do that by raiding these stops, accumulate their long position down here for 5, 10, 15 minutes before then expanding to the upside. And right here, why do we hesitate right here? Because that's where shorts get stopped out. Shorts get stopped out. They start buying and buying again. New people add shorts likely on this candle because they think this might have been a fake out move. Whereas the smart money or the market makers start accumulating here again, sellers start buying because they have to get out of their positions. New shorts come into the market and we continue further to the upside. That's exactly why we hesitate at the old high of the day. We also took some old buy side liquidity out right here. I hope all this makes sense. Ryan, if you have any questions, it's only Ryan. Do you have any more questions? Otherwise, I'd call it a stream. I have the recording. I will upload it to YouTube. And yeah, I think there are two main ways to play the unicorn setup. Only a specific account where you say you only gonna take the unicorn setup. But therefore, I don't know, I think it's better if you have multiple funded accounts. Use one with more risk because the unicorn setup should have a higher win rate in reality. You don't get a trade every day, and you oftentimes will watch a 2022 setup play out, and you're like, should have taken that one. I don't know, maybe that could lead to some live execution mistakes because you FOMO in, because you're bored, because your setup didn't appear. So I'd say that would be something for a additional funded account if you want to use the unicorn setup as a standalone opportunity. Otherwise, I'd use the 2022 model and improve the win rate by using the unicorn setup as a backup failsafe method. Yeah, okay, perfect. All right, then. Enjoy the rest of your Sunday. We will be back tomorrow again for the London session and the New York session and all the other sessions next week. So, yeah. Enjoying the rest of the Sunday. Not doing much anymore. Let's see if the weekly outlook has been processed. 51%. We're working on it. It's a longer weekly outlook. I spoke a little bit more about higher time frame analysis, top-down analysis, how I use fair value gaps on the weekly, monthly, daily time frame to form sort of my bias, listening to the story that the fair value gaps tell me. So I think that's really also a good video to watch later on. Get your charts ready and set up for the next week. And yeah, see how we go from there. All right. Then thanks for joining in. And yeah, we'll be back tomorrow. Bye.